Former President Donald Trump is facing legal penalties worth $500 million, a hefty bill even for a self-declared billionaire. But could the memification of his social media company become his campaign cash cow? With me here to talk about the promise and peril of meme stocks, including Truth Social's parent company, Trump Media, are Brian Jacobson, chief economist at Annex Wealth Management, and Nicholas Clayton, an analyst at SPAC Insider. Nick, Trump Media and Technology Group had its debut last week, and Donald Trump's net worth more than doubled overnight. How did this happen?
Well, it's been a long road. Honestly, it seems like it was a very long time ago, but the Trump Media and Technology Group actually signed a merger agreement with Digital World Acquisition Corp, which is a SPAC. It's a special purpose acquisition company. These are essentially companies that are listed on the stock exchange for the purpose of closing a transaction with a private company, taking it public. Now, that deal was actually signed originally back in October 2021. This was 9 months after, of course, he left office. And it seems like it's been very long from then. It has been a long road getting this through many rounds of, there's been lawsuits. There's been many times when it felt like this deal was not going to be completed, especially with a long SEC review. But it did close. And now it is trading, and the reaction at different times, just even trading in the SPAC itself, which was still trading during the course of this deal, had been up, it had been down, but now that it is actually trading with this ticker DJT, we've obviously seen a big reaction from shareholders.
Now, a lot of analysts are pointing to the fact that Trump's social media company, Truth Social, is actually bleeding cash. It lost more than $58 million last year, and its financial statement warns of substantial doubt about its ability to continue as a business. Now, its stock price did fall from last week's high shortly after it went public, but the company is still worth more than $7 billion. So is this some kind of a bubble?
Sure. So, the Trump Media did release its 2023 financials this week, showing that it only generated $4 million in revenue and had, as you said, $58 million in losses. Honestly, I think some of there's been a lot of attention on those losses, which, now that Trump Media is a public company, there's a lot of levers it can pull in order to continue to get a hold of cash. It can issue more shares. Obviously, there is a willing market that is buying them. The fact that it is trading up, 500% from its SPAC valuation. But it's really that $4 million in revenue that I think, if investors are looking at this from a fundamental standpoint, should be concerning. After all, throughout all of 2023, Trump Media and in theory and Truth Social had that same Trump excitement. That is what they were banking this valuation upon, that, hey, if you trump it, they will come. Well, in all of 2023, that social media platform only pulled in $4 million in revenue. Elon Musk can tell you that getting digital ads to a social media platform is not easy, particularly when there's a controversial figure at the center of it, and perhaps not what the advertisers are looking for in terms of moderation. But the fact that there continue to be these buys of both what we call, meme stock retail buyers pushing up the stock price. And also, I believe, a lot of institutions that are trying to get on the bandwagon and ride the meme stock rise, that kind of creates some wealth there of its own. Now, Donald Trump's own stocks, his own shares, as well as the management, they are locked up for 6 months. They probably will get out a little bit early at 5 months. But that is a lockup that can be waived, and that is one of those issues and one of those things that I do think people are pricing into some of the volatility here. Will they be released to sell their shares early, which would send the stock price back down, or will they stay in?
Now, you mentioned the term meme stock. Brian, remind us, what are the hallmarks of a so-called meme stock?
Yeah, so the term meme really comes from 1976 book that was called The Selfish Gene. And it was really talking about how you can have cultural elements transmitted through imitation, right? So you see somebody doing something and then you don't really question why they're doing it or whether it's right for you. You just simply base it on imitation. And we see this all over the place, and especially in the financial world, where it is based upon the idea that you have this community of individuals, oftentimes at Reddit boards or other online communities, where they just start talking about whether or not they're going to invest or try to short sell particular stocks. And so it almost becomes a matter of they're focused more on the community and the idea that they are going to be mimicking what other people do as opposed to focusing on the fundamentals. And so those are probably the biggest hallmarks of meme stocks is where does the enthusiasm originate? Is it based upon the fundamentals, or is it based upon just imitating what other people in oftentimes online communities are doing?
Now, you mentioned fundamentals, Brian. One metric we can look at to tell us whether a company's stock value is in line with its true value is a price to sales ratio. So let's look at the price to sales ratio of some of these companies. It's going to require a little math, but stay with me, everyone. We're starting here with Meta as a baseline. The parent company of WhatsApp, Facebook, and Instagram has a market capitalization of $1.27 trillion, sales last year of nearly 135 billion. So its price to sales ratio is 9.4. But DJT blows them out of the water with a market cap of $7 billion, but only $4 million in sales last year. That gives DJT stock, Donald Trump's media company, a price to sales ratio of over 1,700. Brian, meme stocks sound like a bubble, essentially. Then looking at these figures, this looks like a bubble too. The sales from this company compared to the on-paper value are way out of sync. Would you say that this is a bubble?
Oftentimes we don't know if it's a bubble until after it has actually burst. But it does seem to have all the hallmarks of that as far as the weak fundamentals, lots of enthusiasm about people who might be, very motivated, either it's politically or socially, to buy into this particular stock. Now, we do have to caution, they could grow into that valuation. Right. So it is a question of, I think people could look at it and say, is this a company where the revenues were only 4 million, but could they grow over hopefully a fairly short period of time, depending upon things that happen politically, maybe socially here in the United States, into a revenue that would be more in line with its peers. So if you kind of think about memes can give rise to fads, and fads, one of the hallmarks there is that they fizzle out, that they do burst. They're very short-lived. But memes can also lead to trends where it's more longer lasting, but there does need to be then that fundamental basis. And so I think it is a question of, as Nick has pointed out, what's the ability to really grow that revenue to justify those valuations?
Okay, so fads on the one side, trends on the other. But Nick, do you think it's dangerous for retail investors, for small investors, to invest in stocks like these?
Well, I think it all depends on how much they are actually investing, and that is really where the danger is. As we've seen various other meme stocks go up, like GameStop, AMC, and, many times those were individual fans of the brands who, in some cases, felt like they were protecting their brands from the shorts coming out of Wall Street. And so it was sort of a community movement. And a lot of this, coincidentally happened during the pandemic, where I think people had a little more time on their hands for these sorts of endeavors. And a lot of, equities trading platforms have made it a lot easier. Things like Robinhood, eToro, Webull. And so I think a lot of the investors, the individual small investors are getting involved in this, are treating it almost similar to, online betting. It's fun to put a few dollars on your favorite football team, and you don't really mind if it never comes back. And I think in particular, when you're talking about the investors here, the Trump phenomenon is, I think, somewhat different. And while I think the GameStop and AMC memes, they went up and down pretty fast. Granted, those companies were able to take advantage of that to issue shares and pull in some real value to their company during the peaks. But ultimately, people either lost those little bets they made or they pulled out of it. For a lot of these Trump investors, I wouldn't be surprised if the genuine Trump fans look at this as being, adding to their collection. If they're already putting money into Trump memorabilia and merchandise, putting essentially a share of his company on their shelf, do they mind if it goes down from 50 to 5?
Now, Reddit also went public in late March, and at first glance, these two companies have a lot in common. They're both social media companies with a cult-like following. Let's quickly compare their stock prices since the debut, starting with Reddit, a big jump after its IPO and then a dip and a bit of stabilization since then. For Donald Trump's newly created Trump Media, it's a similar story, another jump up after the debut, and it took a dive as well. Brian, tell us, who is buying these stocks? Is it the same people who are posting day in, day out on Truth Social or on their favorite subreddits?
It really does seem like that is the case. Although I do have to say, with Reddit, at least they did post some profits for the fourth quarter of 2023. And that's always one of the questions, is whether or not there is some substance behind the stocks themselves. And, if here I'm in Wisconsin and we have a football team called the Green Bay Packers, and they issue shares, and people buy these shares, but they don't actually pay out any dividends. They don't give you any claim to the future cash flows, but people still buy them. They're more like collector's items. And I think that, as Nick pointed out, you do have some people who are fanatics. They're strong fans of these, and maybe they just want to own it to say that they do. It almost creates that sense of community that they feel like they are part of. And sometimes when they're in these online forums, they might want to know that they actually have a stake, perhaps some sort of voice in the way that that community is being governed. We'll have to see if that plays out with these two different types of stocks. But at least when it comes to Reddit, I would say that it does seem like there's a business case as far as how they might monetize this in the future in terms of all that content. Can it be used for these large language models, the advertising that they might be able to have on there, and the fact that they did have at least one quarter of positive profits is somewhat encouraging. It might not be enough if going forward, or enough to justify the price. That's up to each individual to decide. But at least it does seem like there's a little bit more substance besides just some style.
Right, and you brought up substance, so I want to bring back that graphic of the price to sales ratio and add Reddit on there. As you can see, Reddit in 2023 had revenues of $804 million and a market capitalization of $7.84 billion. So that gives it a price to sales ratio of 9.75, a lot closer to the price to sales ratio of Meta, as you can see here. So you were talking about community as well with the Reddit stock. Would you say that Reddit is also a meme stock, Brian?
I probably wouldn't say it's a meme stock, only because I think there is some of that substance there. And maybe it's just my own bias because I understand a little bit more about what the value could be there. So it's not a recommendation as far as the stock itself, but in terms of the company. To me, Truth Social would represent more of a blank check in terms of, are they able to grow if Twitter, now known as X, if they stumble, will that community grow, or will they pivot to something else? Because that's another thing that would be in the purview of the business. Is just because it is focused on social media right now, it doesn't mean that it needs to stay that way. We've seen businesses do that. And so maybe some people are viewing DJT as that possibility that it's not an investment in True Social per se, but it maybe is more of an investment in the former president and as far as any sort of decisions he might make going forward. So I think that just because maybe I understand the current operations of Reddit a little bit better than True Social and how those can be monetized, I wouldn't say Reddit is necessarily a meme stock.
Right. So let's turn back to this blank check that you mentioned. Former President Donald Trump owns a huge stake in Trump Media, in the company, 57% of shares, and he is currently running for re-election. Nick, what does the meme stock hype around Trump Media and Tech Group mean for Trump concretely?
Well, this is what's interesting, is that we saw already investors reacting to basically Trump as a meme stock before this deal closed, when it was still trading as the SPAC, as Digital World. When he won certain primary states, Iowa, New Hampshire, it saw big rises. And I think you'll probably continue to see certain bumps like that as well. Anytime there is something that appears to be politically good news for Donald Trump, you'll probably see people buy it out of kind of general excitement. And it's always difficult to tell in these sort of cases, because there usually is a little bit more institutional money involved in these buys than I think meets the eye. There are going to be institutions that will decide that essentially, well, we think other people are going to buy the Trump stock on days where something good happens, and those buys themselves become a part of the effect. But as I mentioned, I think at the beginning, one of the big things hanging over this is that eventually, although not now yet, Trump will be able to buy and sell his stocks. And as you mentioned at the beginning, he does have some cash needs, very big ones, both legally and you would think, that having money to spend on the campaign trail is going to be a temptation for him. But it's very rare for companies to allow insiders out of their lockups early. That is typically something that does cause a stumble in stock prices. And it's just a question of at what point will that opportunity come? Because one way or the other, even if he's not released early, it's likely that he and the other insiders at Trump Media will be free to trade their shares beginning in either late August or late September. And then it really becomes a question of do they really themselves fundamentally believe in this company as its big, bright future? In addition to doing the social media platform, they have said that they plan on trying to create a news channel that would be some sort of a Trump-centric version of Fox News that's the Trump show all the time. Is that something they really want to put the money into, or is this a somewhat shorter-term cash opportunity for them?
Right. So from what you're saying, I'm getting the idea that there's two ways one could look at the situation. The first would be the really cynical viewpoint that Mr. Trump is just using this as a cash grab, essentially. But the more generous take could be that this cash injection from the stock sales would actually be reinvested in the company to have it be, say, another Fox News type media empire. Am I reading too much into this, or what's your take, Nick?
Well, in terms of Donald Trump's personal actions, I do think it would be really a question of one direction or the other, because the company itself can issue shares and sell them at this higher price, as AMC and I believe GameStop did as well, near the peaks of their meme activity, and that is money that goes directly back to the company. Now, if Donald Trump were to choose to sell some of his own holdings and turn those into cash, that is cash that is going to him personally. Now, he could use that in a way to reinvest in the company, but I do think the market would interpret that as being, money essentially and share capital flowing away from the company. Those stock sales would also push the stock down. And honestly, the market tends to react poorly to even share issuances, but nonetheless, because they view it from the standpoint of any of that is dilution or a downward pressure on the stock itself. And so, but nonetheless, especially if he were to leave the lockup soon, I do think the market would react to that as being, a lack of faith by insiders in the future of the stock. If you truly believe that the company is going to hit all of its heights, you want to keep your shares in the company, because who knows, maybe they'll go even higher. And so it really is that question of what do the insiders here truly want to do with their holdings that are now worth so much, and whether they believe in the same vision that their many fans do.
There's this saying on Wall Street, never fall in love with a stock, but it kind of seems like that's exactly what's happening with people investing in stocks like Reddit or Truth Social. What do you say to that, Brian?
Well, it's very true, although I do have to say it's hard not to fall in love with stocks. We see that oftentimes in portfolios where individuals maybe they got Disney shares from their grandparents when they were little and they hold on to them. So there is that nostalgia. It's one of the reasons why the stock certificates that people used to be able to get, why they were so ornate. It was to get people to not want to sell them. And I think that now in this day, of more people trading, say, exchange-traded funds and collective vehicles where it's more a collection of stocks and you don't necessarily pay attention as much as to what's inside of them. If you think of them more as what are called factors or different exposures, like it's large cap value, large cap growth, or it's a sector, right? It's hard to fall in love with a sector. It's pretty easy to fall in love with a company. And so I think that when you do get into where people are trading the individual stocks, we do see that pretty commonly of people falling in love with them and really having a firm belief in the future, even maybe somewhat despite some of the evidence to the contrary.
It's easy to fall in love with a stock. That's a good note to end on. Brian Jacobson, Chief Economist at Annex Wealth Management, thanks so much for joining us. And Nicholas Clayton, an analyst at SPAC Insider, thank you as well.
Thank you.
Thanks for having me.